Hello and a very warm good morning. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. We'll begin with markets as usual. To my left is my colleague Suyash Maheshwari. Suyash,
Hi Shweta.
good morning to you.
Good morning.
Not a very great start to markets this morning.
Yes, Shweta. So Indian markets witnessed a gap down opening in today's trade, with Nifty opening below the 20,000 mark and Sensex was down about 500 points in the morning trade. Now the week start was on expected lines as Indian markets was shut yesterday on account of Ganesh Chaturthi, and at the same time global equities had turned sluggish. So domestic market had to factor in 2 days of price movements in the global equities, and as a result we saw some correction in today's trade. Now despite a 0.5% fall in today's morning trade, Nifty has bounced back and it is currently sitting above the 20,000 levels, and it did that almost instantaneously, which indicates that 20,000 could be a key support for the index moving forward. Whenever the selling pressure takes over, 20,000 will be a level that traders and investors should track moving ahead. Now on the upside, according to experts, 20,200 will be the first resistance. Now that is the record high levels which the Nifty scaled last week. After breaking 20,200, Nifty will probably look to gain another 100 or 250 points, and 20,300 to 20,400 levels could offer the next leg of resistance. Now shifting focus from the headliners to the broader markets, Nifty mid cap and the small cap indices were trading flat in the morning trade today. Now the mid cap index was down about 0.05% at 9:45, up about 0.5% at 9:45 a.m. this morning, and small cap index was trading with marginal losses of about 0.06%. India VIX also, which is the volatility index, also saw a spike of about 3%, and as a result the volatility index currently sits at about 11.16. It is still below the 12 mark, which indicates that the volatility is still low compared to the last 30 days. Now also I'll just quickly run you through the sectors, Shweta. Now most sectors were trading in the red in the morning trade, apart from the auto pack and the metal pack. Nifty Bank is among the top losers today. The banking index is down about 0.5%, and it is also opened below the 46,000 mark, which was seen as a crucial support for the banking index. And analysts had expected that if the index is able to hold the 46,000 mark, it could see another leg up, which could take it beyond the record levels of about 46,300. We have seen weakness in the banking pack, and most top banking names are trading with moderate losses in the morning trade.
All right, not a great start to the morning. Joining us is Gaurang, Shah, Senior VP, Geojit Financials. Gaurang, thanks very much. Good to have you back. What are you making of the markets opening in not just slightly red, come to think of it, about 0.5% down, both Sensex and Nifty?
Morning, Shweta, and thank you for having me on the show. So, we discussed about the markets, I guess, last week. Quite a decent run-up we had from 1st of September till date. And a little bit of correction was the order of the day. We have a truncated week. My sense, and even on Monday, in fact, we put out a market outlook saying that one should expect a little bit of consolidation and profit booking. And that's what we saw on Monday. Yesterday was a holiday. Today we're seeing that consolidation and profit booking mood. But what is visible on the screen is at least that dips are getting bought into, and our sense is that if you get for the dip, then possibly you should look at buying opportunity from a long-term point of view and identify all those stocks, sectorial picks that you have, and start your investments in a staggered manner and possibly accumulate a little bit more. Crude oil prices at beyond comfort zone. Rupee crossing 83 against the dollar is a concern, and of course a little bit of deficit on the monsoon front is also an overhang on the market. But these are all short to medium term, Shweta. I think notwithstanding what is happening today or maybe what happened on Monday, the long term outlook remains quite positive as far as Indian markets are concerned.
Now Gaurang, as you said, we are seeing some sort of consolidation at current levels, and in fact if you look at the performance and the kind of run up the headliners have posted in the past couple of weeks. I think a consolidation that we are seeing currently, a half a percentage fall, or the index was almost flat on Monday. So nothing major happening, not a major pullback, right?
Not a major pullback at all. Look at the levels of where your Nifty and Sensex is. I think at 20,000 Nifty, or maybe about 67,200 Sensex, even if you get a couple of percentage correction on the downside, I think you should not complain. Remember one thing, on 1st of September this month, we were at 19,260. Correct me if I'm wrong, as far as my memory serves me right. And from those levels, we've seen 20,200 in a matter of just about 15, 16 odd days. So when you see that kind of a rally in such a short span of time, I think one should always expect a little bit of consolidation, and markets have had an history. Whenever you've seen an all-time high, there comes a brief period of consolidation. So one should not complain about these kind of small consolidation or corrections.
Okay.
Now, the last time, Gaurang, you were here, you said that Nifty could, soon scale past the 21,000 mark. You still hold that opinion?
And if yes, how soon would that be? When do you see that happening?
Well, honestly, Shweta, we all should have patience.
Okay.
We've seen almost a 1,000-point rally in about 15, 16 days. Like I was just mentioning, on 1st of September, 19,260, and from there to 20,200. So markets have given us what we deserve. Expect a little bit of consolidation, but my sense is that possibly you will see not only 21,000, I think we'll see much more higher levels from here on. And remember one thing, Shweta, markets do take time to go up, but when they come down, there is no stopping them. And this has been the nature of the market. So let us not expect too much out of the market. Let's take it step by step. I think that would be a appropriate approach. We'll have earnings unfolding from October onwards. Maybe first, second week, you will see second quarter earnings coming through. I think that should possibly give more decisive direction and wind to the market.
Okay.
Now,
And as far as earnings is concerned, since you touched on that, what is your expectation? Given inflation is going to be a bummer, at least for a lot of fast-moving goods, consumer sector, what is the expectation from this earnings season? Will it be better than the first quarter?
Well, so inflation is a concern, no denying about that. Crude oil prices will play an overhang as far as FMCG companies are concerned. Consumer discretionary spend will be pulled back a little bit, Shweta. So you will have possibly a subdued number from those sectors. In terms of numbers reporting on the better side, I think banks, NBFCs, IT should possibly be out of the weather that it was with the kind of deals that they have announced a little bit. Not that it will start contributing immediately, but over a longish period of time, we remain quite positive as far as IT is concerned, banking, NBFCs. Cement is the other sector that we remain positive on. Hospitality industry, hotels, that is, will look good. Healthcare industry, especially hospitals, will look quite attractive. And my sense is that defense, power generation, power transmission, power equipments, along with railway related companies, will report a decent set of numbers. So one particular sector that will possibly be a little bit of concern, I think major from short to medium, would be FMCG and discretionary spend.
All right.
Gaurang, I have a follow-up question on the IT pack. Now, rupee is also under pressure, which is, IT companies are mostly into exports. So it's good for them, right? Rupee being under pressure and trading near all-time low levels.
What my understanding is over here, that whether it is IT sector or whether it is a pharma sector, which is throws positivity when rupee weakens against the dollar, but most of these companies in these sectors hedge their dollar income, and they go ahead. So the impact will be there, but because of that hedge, I think we should possibly not expect too much. But my sense is that it will be a tailwind positive.
All right. And since you also briefly touched on crude remains a major concern. Do you see it hitting $100 a barrel anytime soon? What is the trajectory that you're picking up?
So OPEC Plus, led by Saudi and Russia, are proactively, looking at bringing down. And remember one thing, if I'm not mistaken, Shweta, I think it was on 1st of May onwards that they cut their output by 5 lakh
Right.
barrels per day. And then they have further reduction coming through. We have a decent amount of comfort zone as far as our energy requirement in form of crude oil is concerned with Russia and Iran. And Iran happens to be the second and the fourth largest producer of natural gas and crude oil. And with both these countries, Shweta, we have a rupee-dominated local currency trade. So that comfort zone is there. So the very serious impact on India as far as crude crossing over to $90 a barrel or maybe hitting 95 and $100 a barrel. I think that will be cushioned with the kind of bilateral trade we have with Russia and Iran as far as our energy requirements concerned. But numbers is what very important. So of our total requirement, how much are we dependent on Russia and Iran, and how much rest of the world is what we'll have to possibly look out for. But there is no adverse commentary coming from the government as far as elevated crude oil prices are concerned.
All right. So not much worries there, Suyash.
Definitely,
Yes.
but crude has surpassed, it is almost at the
93,
96 dollars a barrel,
That is true.
Shweta. Brent has surpassed the 93, sorry, WTI futures
WTI has
surpassed the $93 a barrel mark. So crude definitely remains a big overhang, especially since it is driving up commodity prices. Which could also increase the input cost for a lot of these companies, and as a result hit their profitability. Gaurang, I also wanted to touch upon Nifty Bank. Now it is among the worst performing sectoral index in today's session. It is down about 0.5%. Now the expectation is that banks may face some liquidity concerns going ahead. Also there are expectations that NIM, the net interest margin, may also contract. But at the same time, we are seeing PSU banks outperforming on a day-on-day basis. So what gives? Why is there a divergence between private banks and the PSU banks?
So for the last not many quarters, Suyash, but for last many years, private banks were outperforming public sector banks. With the kind of cleansing that has happened in the public sector banks, be it with respect to discipline in terms of recoveries concerned, gross and net NPA, bringing down provisioning, improving profitability, net interest income and margins, CASA ratio, uh, consolidation has thrown in a lot of positivity for public sector banks. And this is one of the reasons why you're seeing public sector banks now outperforming private sector banks. Not to forget, Suyash, Nifty Bank was the first one to hit an all-time high. So whenever you have a sectorial index hitting an all-time high, followed by other, Sensex, Nifty, or sectorial indices, whenever these kind of correction comes through, I think the one that led the rally would be the first one to possibly consolidate. Today, I believe there was some report by some entity on HDFC Bank, which is kind of downgraded HDFC Bank. So you will have a little bit of overhang, and weightage is also there. Our sense is that in the liquidity, I don't think that's going to be a big problem because there is enough liquidity in the system. And with the additional cash reserve requirement getting phased out by October, if I'm not mistaken, first week of October is what RBI has also mentioned. I think it will throw in a little bit of positivity. So on the earnings front, we remain optimistic about both private as well as certain public sector banks which are under fundamental coverage. And we also believe that there is very strong credit demand. So your loan book is going to grow slow and steady, and margins are going to stay intact and in fact improve. And with recovery of gross and net NPAs and provisioning coming down, you might see a little bit of outperformance from public sector banks, because that's where there was a huge concern in terms of large number of gross and net NPA and provisioning. So that will start ebbing off a little bit. And in terms of valuation also, because public sector banks were underperformers and now there is a change for good, I think quite a bit of long-term investment liquidity is getting attracted towards public sector banks. But a word of caution over here: there are a lot of smaller, mid-size, small-size public sector names, wherein we have a concern in terms of sustainability, in terms of earnings that are reported. 1-2 quarters will be extraordinary. followed by a disaster performance. So we need to have sustainability in terms of earnings for those small public sector banks.
All right. Gaurang, also just if we could quickly talk about the FMCG pack. Now, FMCG pack, I think it's the only sector that has not participated in the recent 1000 point run up of Nifty to all time high levels, and even today it's down about 0.7%. Now, especially that we are moving into the festive season, do you expect the FMCG pack to gain some traction, see some sort of buying interest?
And also, just to add to that, I think FMCG, in fact, on Friday and this Monday, we were extensively discussing, me and Suyash, as to what happens with the FMCG sector come the festive season. They are hoping to perhaps sell more, but also, giving out more doles, reducing prices of a lot of goods, also in a hope that people will buy more in days and months to come. How is that expected to dip into their margins? The margins will, of course, take a beating, and all of this happens on the back of rising crude oil prices. Will that be a double whammy, perhaps, for the entire sector?
So let me just elaborate a little bit more over here. So, crude oil prices had this impact on the FMCG pack. Point number one. Point number two, deficit monsoon is also a concern because large part of the volume growth for FMCG companies is credited to the semi-urban and rural India. And the income for semi-urban and rural India largely comes from the agri activity that they have. It all depends upon what is the kind of output that we have, what is the income levels for semi-urban and rural India, and their capability of discretionary spend, or their desire to spend more on higher category of goods. Our sense at Geojit is that for the second quarter, given the backdrop of events like higher crude oil prices and deficit rainfall, the demand from semi-urban and rural India is going to be a little bit below the weather. It's going to be down. High-end margin goods numbers would be relatively lower, but then mid and entry-level goods, I think there will be an uptick. How much of that demand is being taken care by metro, tier 2, tier 3 cities is what we'll have to wait and watch, and that will possibly be clear when we have the second quarter numbers unfold and we have the commentary from the respective management of FMCG companies. But we, notwithstanding this, another 2 to 3 months kind of an overhang on the FMCG pack, India remains a consumption-driven country. It was, is, and it will always remain. In terms of discretionary spend and terms of distress, you may not be spending on high-end premium goods, but you will definitely switch on to alternatives which are available, be it metros, tier 2, tier 3, or semi-urban or rural India. Ad spends, discounts may create a little bit of pressure as far as profitability is concerned.
All right. Pressure on FMCG companies, tepid demand perhaps expected in weeks and quarters to come. But let's also quickly shift focus to some of the stocks we are tracking, Suyash, this morning.
Certainly, Shweta. So first, let's talk about Tata Motors. Now, Tata Motors on September 19 said that it will hike the prices of its commercial vehicles by up to 3% starting next month. So from October 1 onwards, the price of commercial vehicles will see a bump up of about 3%. Now the price hike will be across the entire range of CVs, and it is being implemented to to offset the residual impact of input cost. Now this is a third price hike from Tata Motors on the CV portfolio. The first came back in January when they hiked the price by about 1.2%. Then in March they hiked the price by about 5%. So effectively this year alone CV prices have gone up by about 9%. Now Gaurang, I have a very simple question for you. The price hike will definitely positively impact the top line of Tata Motors, but what kind of impact do you see it having on the bottom line? Because the fact remains that input cost is still elevated. Now this time it is being driven by crude, which is threatening to break past the $100 barrel mark.
So Suyash, well, let's face it, it's not only the input cost, but also the policy changes by the road transport authorities and ministry, making a vehicle safer and more comfortable is what has been spoken by the Honorable Minister Nitin Gadkari. So my sense is that whenever you want to have additional features uh, available, whether it is a passenger vehicle, four-wheeler, or a commercial vehicle, wherein he has spoken about more safety and cabin-related comfort with AC, etc. Cost is definitely going to go up. And whenever these kind of factors come into effect at ground level, respective companies will definitely price their hike their price and pass it on to the end consumer. How much of that? I think it is at a very nasal stage. It is an announcement. For October onwards, we'll see these price hikes coming through of 3%. Overall, how does it impact the month-on-month numbers for all those companies who manufacture CV and have taken price hike? Will be a wait and watch. But not only that, my sense is that, excuse me, that scrappage policy, which has also been put in place, will add to the positivity. Along with that, you have dedicated freight corridors, not only for railways, but even for road transport. You are having a lot of new projects getting inaugurated and opened up. So demand and e-commerce is also something that has a push in terms of vehicle demands. So our sense is that it may be a short term kind of a negative, but long term we remain extremely positive. And not to forget, I think the economic activity is picking up, related to transport, related to mining, related to construction, etc., etc. So demand for such vehicles will also be going up over a period of time.
All right, and on back of that news, Tata Motors stock has reacted positively. It's up over 1% this morning. What sort of impact will that have on the overall numbers and the sales figure? We'll have to wait for that. Comes into effect from 1st of October onward. But let's shift focus to HDFC Bank, which is also in news this morning.
Yes, Shweta. So HDFC Bank has reappointed Shashidhar Jagdishan as the MD and CEO for another 3 years. Now, Jagdishan took over from when Mr. Aditya Puri stepped down back in October 2020. So he has already been at the helm for 3 years now, and he'll continue to hold that position for another 3 years. Now, as we were walking into the newsroom, Shweta, there was another bit of news coming in that
the asset quality of
asset
HDFC.
quality, that this is coming from HDFC Bank. Now,
Right.
there was a meeting between the top level management and some of the analysts, and HDFC Bank said that it expects worsening of net interest margins, worsening of net worth and asset quality in the very short term, given that it has recently merged with HDFC, whose assets, at least the GNPAs, were on the higher side. So that could be a drag on HDFC Bank. Even today, we are seeing, the stock is down about 3% or so. And Gaurang,
I also want to know, and maybe from Gaurang itself, is this a temporary blip, Gaurang?
On HDFC Bank, Shweta?
Yes.
So, again, I get excited when such reports come because I get to invest in a very strong entity at a correction. And we remain constructive in terms of positive outlook on HDFC Bank. We have a target of, if I'm not mistaken, 1,980 or so. So, and again, today, if I'm not mistaken, one entity has come out with a sell report with a concern on margins and earnings. I think there is another one or two entities which have come out with a higher price target for HDFC Bank. So, which one do you choose? So, my sense is that, if I look at the history and the earnings capability, credibility of the management, and the opportunity that lies ahead with the merged entity, we remain absolutely positive on HDFC Bank. There can be problems in any entity, however strong or however weak that company is depending upon what the opportunities and situations are in the future. But all these things are short to medium term. My sense is that long term, if you are invested in HDFC Bank, my advice would be to continue to hold your investments. And if you're looking at opportunities on correction to invest in HDFC Bank from a long term point of view, then days like today are the days wherein you should identify corrections as an opportunity to invest in.